Lance Ippalito is back from the Future of Money. Lance, welcome back.
Hey, James, how are you?
Lance, where are the opportunities today in the Future of Money?
We are seeing a complete 180 from Friday. We've had, with the coronavirus, we've had the market sell off. The Dow was down 600 points on Friday. And then today, you had the Shanghai open up, limit down about 9%. But you actually had the China ADR stocks like a Baidu, a Baba, JD. These stocks are raging higher today. Tesla's up $101 now. That I'm speaking up over 15.5%. You have Google earnings after the close. The money, the big institutional money is pouring in today. Just a complete change. And I think these FAANG stocks, your Google, your Netflix, we saw it with Amazon Thursday night as they reported earnings. The stock was up 200 points. You're seeing big rotation into tech, and I think it's going to continue. There's nothing really slowing down this market, even the whole coronavirus taking over.
Sure. So in the context of a global marketplace and a connected marketplace, is it safe to say that large institutional pools are selling China and buying U.S. tech, FAANG stocks in particular?
I think you're spot on right there with it.
Okay, so this is interesting because if you look at technically the trading of the FAANG stocks tend to fall like the RSIs have been through the roof. The Bollinger Bands have been like it's trading outside of the B bands, where normally in a traditional market you would be expecting them to fall back into the pattern, and that's just not happening because we're actually seeing exponential growth of cash into the US market at the expense of the Chinese market, fueled by coronavirus. But I mean, Europe's looking weak, China's looking weak, Asia by extension, and so it looks to me like there must be one hell of a long trade option side in the US market.
Well, yeah, you're completely spot on. And what I'm looking at actually right now is these stocks like a Tesla, like a Netflix, that have massive short sellers. You know, we have Chanos with Tesla, Greenlight Capital. David Einhorn just came out ahead of Netflix earnings, short Netflix. And these stocks are causing massive short squeezes. So I'm actually looking at Netflix now that we speak, because I do feel like Tesla is a little overextended. I know, it can have a crazy high RSI and it will continue to move higher, that RSI, but the stock keeps going up. I'm looking actually at Netflix. It was trading around 340 on earnings. The stock actually went lower about 2.5%, 3%. Now it's printing around 356 and up 3.1/3% today. I like even going out of the money on options, looking at about 30 to 45 days out, and looking at some of these Netflix 380 call options. So again, they're out the money, but they're cheap, and you get a couple 3% up days, and Netflix is going to be right there.
Right. So the guys who are short these stocks, I mean, those are some big names who can probably afford to be short for quite a while, but nobody can afford to be short longer than the market can afford to be irrational. What are they banking on? Just a technical cover, or are they actually looking at a fundamental weakness from the overbought state driven by this explosive growth in capital flowing into those names?
Well, the rationale in Tesla was Solar City was a fraud. Tesla's running out of money. They're in debt, and they're not producing. That has completely changed. Every analyst on the street has upgraded Tesla over the past 30 days, and the stock is soaring. It went from 300 to now 755. With Netflix, what's actually insane about this name is they're burning through cash. The fundamentals, in my opinion, and from these large hedge fund managers, they're not there. They're spending so much money on content, and subscribers, international subscribers, are actually going down. But, and this is huge, especially for Netflix, they continue to, even with bad earnings, even with bad fundamentals, they continue to move higher. And once these names get going, this massive short squeeze occurs, and it just really drives the prices higher. You could call it with Netflix doing reverse splits, whatever you may, financial engineering, but they continue to move higher, and these shorts eventually have to throw in the towel. They have to cover, and when they do, that's just another bullish sign for these big momentum stocks.
Yeah, you bet. So is it safe to say that option side, this is the only game in town right now?
No. Is it fun? Is it entertaining? You're darn right it is. It's a fun game. There is earnings approaching. And we saw Amazon report. We had Facebook actually report some pretty bad numbers, especially international. You do have opportunity in earnings. In fact, I was looking at Hartford Financial today. I know some big, large tech names and retailers start to report earnings like Capri Holdings, TPR, which was the old Coach. Some of these luxury retailers. You have the cruise liners like Royal Caribbean reporting earnings. There's opportunities because a lot of these names, especially with the situation in China, the transports, the airliners, they've been all over with the whole coronavirus. There's opportunities out there. Do I think they're, opportunities that are 3 to 6 months long? No. But there's things in the options market that you can play that is short dated, that is news, that actually offer favorable risk versus reward if you want to be active.
Sure. I noticed that pertaining to the coronavirus stocks, as the new category has emerged to be called, Gilead came out with a statement suggesting that they were actively developing a vaccine and a treatment, and cautioned, though, that it may be up to a year or at least 10 months before this was ready for mass market deployment. That had a beneficial influence on the stock price of Gilead in the nearer term. But is that something where, there's longer term opportunities in companies that are in the business of creating vaccines for situations like Ebola and coronavirus?
I think, and you brought up Gilead, which was a perfect example. I think a lot of these names, like Gilead, for example, it actually printed up to about 68.5 right at the open. Now it's about $2 off the highs. I think if you're in these names, it's sell the news. So you get that pop, you take your profits, and you move on. I don't think it's you buy and hold them hoping they're going to come, with a cure that, it could be months down the road. It's just, if the money's there, why not take profits, put it in your pocket, and move on to the next opportunity?
Sure. So specifically, any parting advice for trades that you think are particularly attractive at this point, Lance?
I think you have the airliners that, yes, with all the negative news and with all the stopping flights from China, I think if you actually want something that is cheap, that is beaten down, I actually think airliners and transports right around here, it's not a bad thing to start bottom fishing, especially if you're, let's say, a buy and hold investor and you want to buy something that's beat down. You're having opportunities, and as a trader, as an investor, that's all you can ask for.
Sure. Now, when you say airline stocks, are you focusing on the U.S. names only, or are you including, things like British Airways, Qantas, etc.?
I tend to like the airline stocks that management is management and the fundamentals are there, and they've had a history of reporting greater than expected results. Specifically, like a UAL, they came out with good numbers. The stock's about $6 from the pre-earnings levels. And another name I like is Alaskan Airlines, ticker symbol ALK. Really good management there. And they kind of they're really the only airliner that goes in and out of Alaska from the last time I checked. So two names there that I find very solid. Names like an AAL, the fundamentals aren't there, and they've just had too many problems, especially with the whole Boeing situation over the past few weeks as well.
Sure. All right, Lance, that's a great update as usual. Appreciate your contribution. We'll come back to you next week. Thanks for joining me.
Thank you, James.